Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, to bless y'all with another video here on Blessed to Invest. And today, as you can see from the title here, we're here to talk about dividends, the retirement vehicle that a lot of people like to use, how to bring in consistent income every month, every 3 months or whatever. But today, as you know, a lot of people pay bills on a monthly basis. Most dividends, when they come in, like the Apples, the Googles of the world, they come in on like the every 3 month basis, every 6 months. Sometimes it's even once a year, an annual dividend. So for this specific video, we're going to talk about the monthly dividends because bills don't come every 6 months. They come every month. So getting and finding a stock that you can take advantage of every month is going to really help you, especially people that are trying to build a retirement portfolio. So without further ado, let's get into it. So side note, so I want to divide this video up into kind of like 2 sections. So one is going to be the great dividend stocks that you need to look at, do some research on, and like, hey, maybe I need to add these to the portfolio. The second half is going to be some of these dividend stocks are going to be around for years to come. Some of them may come and go, and sometimes there are other options out there that may be better. So I'm also going to break down how to find the best dividend stocks, like what to look for, what qualities you need to look for, etc. So stay tuned through the whole video because there's a lot of information in this video. And just for the research, make sure you spam the like button down below for all the research I've done on this particular video. But without further ado, let's get in. So the first stock we're going to look at today for dividends is SCM. This is Stellar Capital Investment Corporation. This one is really solid. It's been around for a pretty long time. And what they focus on, they do investing in mid-cap companies. So the whole company is based on just investments. It's an investment firm, and they're consistently buying just mid-cap companies, not the big names of the world, not the Apples, not the Teslas, not the Microsoft, but just mid-cap names where they're able to consistently bring in a return on your money, and they've done a pretty good job of that. A lot of times when you're looking at market fluctuations and looking at companies that deal in the investment industry, sometimes there can be like waves and flows of, sometimes it's a really good year, sometimes it's like a really weak year. But this company does a really good job of managing people's money and investing it really well. And you can see that because it pays a consistent dividend. The dividend for this one is going to be about 6%, which is solid. I really like that. And on top of that, over the years, the payouts have been consistent. It's been consistent growth in the company. I like how they're managing their money. The debt wise isn't too bad. It's slightly high, but it's in a decent range where you can live with it, and you can safely put money in here and be like, okay, this is going to be around for a while. From a technical standpoint, I love my technical analysis. It's a really consistent chart. It's not like a big growth chart. And that's not what you're really going to see from a lot of these dividend stocks. It's not going to be like 500% returns over the next 5 years. It's not going to be that, but it's a consistent chart where you're not losing money and you're not gaining a whole bunch of money, but you're not losing money either. So it's going to keep your money pretty stagnant, and you're also going to be able to spin off those dividends. So highly recommend checking this one out because it's a really nice one for sure, and it's been around for a pretty long time. All right, so the next one we're going to look at is LAND, L-A-N-D, and this one is really interesting. This is one of the ones that's going to be slightly different, but still have the same theme of the rest of the companies we're going to look at. This one is up really big. It's up a lot higher than a lot of these dividend stocks are. If you look at a chart, most dividend stocks are going to be kind of like flat almost. Maybe they'll go up maybe like 5% over the last year or something like that. Nothing crazy because they're bringing in the returns are coming from the dividend, not just from the stock appreciation. But with this particular one, it's done much better than the S&P 500. And on top of that, it's spun off a consistent dividend, which is really nice to see. So you're really getting the best of both worlds in this company. You're getting high returns and pretty high dividends on a monthly basis. I do want to let you know to kind of be aware of something like that. Just be cautious when you're investing in those dividend stocks where it's going like really high like that. But I do want to put this on your radar because it is a really solid company. The way they make their money is from farming. So it's really a consistent income that you can get from farming. Farming isn't going anywhere. People are going to still continue to eat food. Agriculture isn't going anywhere. Are you still ordering stuff from McDonald's and Burger King, from all your restaurants? Like, food is going to be here forever. So this is a solid company. You know it's going to get consistent returns. The way they manage their money is pretty good. A good debt to income ratio. A lot of analysis are saying that this is going to be on the up and up, and I like it from the chart as well. Just you can see how it's performing over the last year. It's really solid, good company, and I do recommend checking it out. This is on the lower end of the dividend scale because it is paying out about 2%, like 1 to 2%, which is a little bit better if you want a dividend. Most dividends you really want to get on a lower scale. Getting something like 10-12% it gets a little risky at that point, but definitely go check this one out. It's a really solid one. Next one we're going to look at is Good. This is a good one. Good. This is Gladstone. I really like this one. I'm a big fan of the real estate industry, and this one sticks right into the real estate industry. I can't speak to it. Industry, and they go straight into commercial real estate. The thing about commercial real estate, it's really solid, it's really consistent. And when you're doing dividends, that's what you want to see from a company. Solid, consistent industry. So they focus on commercial buildings, and they'll rent their facilities out to like big corporations for the next 5-10 years. Usually that's what happens in commercial buildings. You're not going to have let's say a Macy's or something. It's not going to be on a month-to-month lease. It's not even going to be on a year-to-year lease. It's usually going to be on a 5-10 year lease. So you know when you get into this company, you're guaranteed to have money coming in. If all their other buildings fail and they only have one, you know it's going to be in there for at least 5 to 10 years. So on top of that, they have a lot of different properties they own. I was looking at the website. They have properties all over the United States, really. So you're really in a good spot. On top of that, it has the consistent chart from a technical standpoint that you want to see, and they have consistent payouts of their dividends. So it's really a win-win-win for this company right here. You're not going to get a lot of growth. That's not what you're looking for, but it does have a small bit of growth for this company. I do recommend trying to buy this on the lower end. It does trade in almost a range. It's like a range that looks flat, but it slightly goes up like this. So try to get it on that lower bound of the range on a technical standpoint, so you can get your best dividend return for your money. But this one, I really like this stock. It's solid. Debt to income ratio looks good. The payouts look good. They're really consistent, and it's all around, what can I say? It's just good. So next one we're going to look at is Main, MAIN. This is another great company I want to look at. And with this one, this company, what they do kind of reminds me of a stock I was in a while ago when I first started trading. I got into like this company that was flipping debt around, like mortgage payments and stuff like that. Company ended up collapsing. It had a really high dividend. So learn from me, don't go into like super high dividend stocks where they have like loads of debt and they're not managing it well. But with this one, I like this one. Even though they're in the same business of managing debt, they do it on a mid-cap ratio standpoint. So they're managing debt of mid-cap companies, and they're able to make money off of the interest payments that they're paying, that the companies are paying them. So as long as the companies they own are doing well and able to make their bills, this company will continue to pay dividends. From a technical standpoint, it looks really clean. The chart is pretty flat. It has these occasional pops. It kind of reminds me of like something, I don't want to say something I would day trade because that sounds a little sketchy, but it has these little mid pops that sometimes you want to take advantage of if you are going on a long-term basis. If you can get like bottom ticket, if that's possible, if you're trying to like time it, get in there, bottom ticket, and try to get in to get your best return as possible. They pay out about 6% on this stock. It's really solid. It's been around for a pretty long time, and I definitely recommend you check it out. All right, the next one we're going to look at is Horizon Financial Group. The ticker symbol is HRZN. And the reason why I want to look at this one, this is a little bit different from the other ones we were looking at, where the charts are kind of flat, the charts are up, and everything looks really good on the chart. So this one, the year is a little off. It's had a couple of bad news stories come out about this company on the finance. Again, it's a financial company. It's had a couple of bad news stories, but overall, everything fundamentally looks good with this company. It's a consistent dividend payer, which you want to see. You want to see consistent dividends. On top of that, if you look at the 5-year, the chart really doesn't look that bad. It's on a point where today, if you buy it right now, you're at a good buy point. It's sitting on some support levels. One, that's really nice from a technical standpoint, and you're getting a really good dividend, over 6% for this. So if you're looking for a consistent payout in the financial industry, this is one of the companies I say is like a hidden gem to look at. If you want something that is going to be consistent, and then I think it also has the opportunity for a little bit of growth over the next couple years. I looked at a couple of analysis guys. They're saying, okay, it's short for the short term. It might hurt a little bit, but you have to remember we're in a downtrending market. One, the market has been horrible 2022 basically for everything. So if you were to get into this right now, just imagine you're buying the bottom and then you're able to ride it out a little bit for maybe a good 10% return, and then you're going to get your dividend on top of that once it bounces back. So I think this is a win-win-win scenario for this company. Definitely check it out. It's Horizon Financial. All right, so with those 5 that we've seen today, a lot of them have all these things in common. And what I wanted to break down to you is, even if these companies maybe they go away or they're not as popular or they're not as good a couple years down the road, this video will still be helpful for the people that are trying to get into new dividend plays. So what you want to look for when you're looking at dividend stocks are a handful of things. One, you want to look at for a strong industry. You don't want to be in some trash industry, some hype industry. You want something that's going to be consistent, that's going to be around for a long time. As you've seen from this, the stocks that I chose, a lot of them were in real estate, a lot of them were in land. It was a financial company. The reason why these are really good is because, one, real estate isn't going anywhere and it's going to pay a consistent dividend every month. You know you're going to get some type of rent payment from the people that are renting out these businesses. Number 2, with the financials is really good as well, because debt payments spin off interest. Interest allows you to get consistent dividend income. So that is really good. So if you sit in between like the real estate, financials, and also I say like basic materials as well, those are the 3 industries that have always been really solid for dividends, because they're going to be monthly income, consistent income, and you can sit back 5 years from now and know exactly what you're going to get return wise. Even if the company isn't doing as perfect as it needs to be, you know how it's set up. It's going to be just fine, and they can turn things around over the next couple of years if they need to. So stick with that, a very strong industry. If you notice, like tech companies, the way they pay out, maybe like tech companies or consumer cyclical and stuff like that, sometimes these businesses go through highs and lows, where sometimes the sales are really up, next quarter the sales are down, next quarter it's real up, it's Christmas time or something like that, and sales are going through the roof. So paying out a consistent dividend month over month may be a little bit more difficult for these type of businesses, but for flat like real estate, land, financials, it's going to be really easy for them to pay a dividend. So stick with those companies, those type of companies, and you should be okay. Next thing you want to look at is the payout. You want to make sure you're getting into companies that don't have these weird payouts where they're paying out 3 months and then all of a sudden, business is looking bad, we're not going to pay you out anymore. You don't want to see that, especially people that are on a retirement income, fixed income, and they have just a couple $100,000 to put into these stocks. Maybe they have a couple million or whatever. You want consistent income. You don't want people saying, okay, I don't feel like paying you this month, so you're not going to get your dividend. You want something that's very consistent over the past couple years. I say give it 2 years to really see if they're going to be paying out a consistent dividend. And if you can get that 2 year of consistency, you can say, okay, I can comfortably put my money here without it going anywhere. Next, you also want to look at how is the company performing. Usually there's going to be a correlation between how high the dividend is and how well the company is doing. Like if the dividend is like up here, like 12, 15, 20%, 9 times out of 10, the company is going down. Sad to say. So you need to be careful with how high you go to look for dividend stocks, because you don't want to get into a situation where you are getting a 20% return on your dividend, but you just had a 40% decline in your equity. You don't want to see that. So please be careful with that. I learned that the hard way when I first started investing in dividends my first year getting into the market, losing half of my money, but I had a nice dividend. So be careful with that. It's really a trade-off in this market. So the average really dividend wise is like 5%. Really, if you're looking for a solid dividend company, going any higher than that, you run into risky territory. Sometimes you can find diamonds in the rough. Like during the pandemic, everything was crashing. Everything was down like 40, 50%. And you can get a nice dividend for 10%, but those don't come every day. But when you do see it, definitely take advantage of it, take the opportunity, because it can really set you up long term where you're getting a 10% dividend, 15% dividend on your money, which is amazing. It's better than some real estate return. So pay attention to that. High dividends should raise a red flag for you. Next, you want to make sure there's a good debt to income ratio on these stocks, especially in the financial industry. You want to make sure they're not loaded up with debt. And the same thing with real estate too. You want to make sure they're not loaded up with debt and they're not able to manage it and they're able to pay people consistently. So a lot of these companies, this kind of goes into the fact with these high dividend stocks, for some reason, they have loads of debt and they feel like paying people off really high. It all comes together. High dividends, a lot of debt. It's just a bad combination. So be careful with that. I say keep the debt around 24 to 36%. You can go a little higher. You can go, if you want to go a little lower, yes, but you can go a little higher than 36%, but stay around that range where the company isn't dealing with tons of debt, where it's struggling to pay off the debt and struggling to pay you, because you need to get paid and they need to stay alive. So make sure you stick with that. All right. And last but not least, you also want to look for the cash to equity ratio. This is going to be really important because sometimes even in these industries where they're like really strong and you have real estate that's going to consistently pay you out, you have interest payments that's going to consistently pay you out, sometimes you just go through bad months, bad years. And having cash on hand, a company that has a lot of cash on hand, they're able to continue to pay you out even if they're not making money for that given month, for a given year or something like that. So that sets you up for a long term. Kind of like in your own personal life. If you were to get laid off and you have a decent savings set aside, you can continue to pay your bills without having any issues. But if you don't have any savings, you run the risk of going into default, losing a lot of money, et cetera, et cetera. So same with businesses. You want to make sure they have some cash on hand so they can continue to pay their bills. So keep that in mind when you're looking for dividends. Make sure they have consistent payouts. Make sure they have they're in a strong industry. Make sure their debt to income ratio isn't that high. Make sure they have some cash, and make sure the dividend isn't crazy high. So be on the lookout for that, and you should be okay when you're investing in dividends. But if you have any questions, let's chop it up in the comment section down below. Leave a couple comments, and that's going to wrap it up. It's me, your boy. Blessed Applesauce, stay blessed, and I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.